Hi, my name is Henzi, and today I'm here with Dr. Ryan Lemand. Did I pronounce it right correctly?
Yes.
So I was very excited to run into this gentleman today, and I feel so honored because he's been on. You've had a massive podcast, well, not even podcasts. You've been on huge shows, right? Like BBC and other platforms.
So I'm frequently on Bloomberg, CNBC, Sky News, Al Arabiya, which is the Arabic, Bloomberg, multiple other main network shows, mainly business shows, to talk about international financial markets, yes.
Wow, so you actually give insight on the financial markets.
Absolutely, because in my company we basically manage global portfolios and we have institutional clients.
Right.
And I often intervene to give views about international markets and the geopolitical events that could affect financial markets.
Okay, so I guess for the viewers, I should also mention that you're the CEO and co-founder of Neovision, right?
Absolutely. So Neovision Wealth Management is a company based in Abu Dhabi global market, Abu Dhabi's financial zone.
Right.
What we do is two things. The first one is wealth management, where we cater for the ultra wealthy. Mm-hmm. We manage their portfolios, help them structure their wealth and deploy their investments. The second vertical, which is booming at the moment, I have to say, is funds as a service, or ManCo services. So this service has existed in Luxembourg, Ireland, and multiple locations in Europe for 50 years now, but not yet in the region. So funds as a service consists of creating completely white labeled funds that are fully serviced in ADGM, in Abu Dhabi global market, for foreign fund managers, family offices, fund sponsors. So this allows fund sponsors basically to have their own fund that's completely white label, where they take investment decisions or dictate investment strategy, but fully serviced by us as the designated fund manager.
Okay, so if I understand correctly, it's not necessarily, so a fund has two parts to it if we're talking about ADGM, right? And whenever you have a fund, you have to have, like you were saying, the fund manager. So instead then of someone coming and saying, I want to set up a fund, and you guys setting up both for them, you then are the fund manager, and then you have multiple funds under which are wholly owned by your clients.
Precisely, because to create the fund and to manage it, you have to have a license called the 3C license.
Yes.
And in many cases, foreign fund managers and certain fund sponsors, their ambition is not to create a fund management company, especially when they have one somewhere else. So they would only like to have a fund or a footprint in ADGM, and we allow for that to happen without having them to go through the cost of getting a license, renting an office, and building a full-fledged fund management company. And this helps these companies to actually have a footprint, because otherwise they wouldn't have a footprint.
Exactly.
They would just steer away and go somewhere else.
Exactly. And because that's the thing, even when we advise our clients on setting up funds, it's like at least a 6 to 8 month process, if not a year, right? But it's the fund manager that's actually the entity that takes the time to set up, right? The fund itself
takes 6 to 8 weeks.
Exactly.
So we do it very, very quickly in 6 to 8 weeks. So in Europe, for example, Luxembourg, which is the largest fund jurisdiction in the world, it's based on ManCos. So US fund managers, for example, who would like to distribute their funds in Europe, they create funds under ManCo or funds as a service companies in Luxembourg, and then they distribute the funds in Europe. Imagine if every single US fund manager had to get his own license, her own license in Luxembourg to distribute funds in Europe. Then
they wouldn't have a funds regime.
Yeah, precisely.
No.
So this is why ManCo companies, fund service as a service companies, are very, very important. And this is what we do. We save time, we save headache, we take the headache away from the process of creating a fund and managing it.
But as far as I'm aware, you can still set up a fund here with an overseas fund manager. Can you not?
In what do you mean?
So say, for example, if someone had a Cayman fund, right, and they
Yes.
had their fund manager there, and then they just wanted to set up the actual fund here, couldn't the Cayman entity then be the fund manager of the fund over here?
So in this case, we would be the fund manager, and they would be designated as the investment advisor. So we split the asset management function into two parts. The first one is fund management, which we do, and then investment advisory, which is what they do. And then it completes each other. There are cases where we create feeder funds. A feeder fund is a fund that feeds into a master fund that is based elsewhere. That's another very light touch.
GPLP structure, or is that?
No. We can do GPLP structures. So a feeder fund basically is when a fund manager has a fund somewhere and does not want to create another strategy, it just feeds into that master fund from here into that master fund. We do GPLP structures as well. We're currently working, it's not yet announced, but it will be announced, on one of the first tokenized funds in the region, where the fund invests into virtual assets and the units are tokenized. So investors can buy tokens instead of units. We also have 2 cryptocurrency funds that will be announced very soon as well. So these were done for crypto investors, so investors who have an investment strategy on specific cryptocurrencies, which Bitcoin obviously, and they've asked us to create a fund for them to formalize that investment strategy and institutionalize it. So many crypto investors today, they have an account on an exchange and they trade for their clients. Creating a fund allows to institutionalize that offering, obtain an ISIN number, have a NAV. So really, it's the marriage between DeFi and traditional finance.
Exactly. Oh, I have so many questions. So I'm going to take us back for a bit and then I'll jump us forward.
Sure.
Okay, so this seems very out of place given what we were just talking about, but why would someone set up a feeder fund? If the fund is just going to feed the parent entity, what's the benefit of doing this?
So the UAE at the moment is attracting an astronomical number of foreign fund managers wishing to raise money, right?
True.
And we call them suitcase fund managers because they travel here for 3-4 days, they do 20-50 meetings and then they leave. Giving them an edge by creating a fund here in the UAE whereby people can go on the register and see, well, they have a fund here, gives them a footprint, gives them an edge over others.
Gotcha.
The second reason is that this fund is registered with the regulator, which means this fund can be distributed to everyone as per the regulations in ADGM and onshore under ESCA. Then this fund can be distributed on a wider scale than distributing a foreign-based fund. So, for example, a Cayman-based fund
Makes sense.
cannot be really registered with ESCA, with the federal regulator for distribution. So in this case, you need a feeder fund. So there are multiple cases where investors need a feeder fund.
I understand. You explained very well. I guess you've had a lot of practice with these other news agencies. Okay, now I'm going to jump us forward, right?
Sure.
So let's get back into the virtual asset funds. So as far as I know, when you buy into a fund and you get a unit, that's very soul bound. It's personal to the person who invests, right?
Yes.
So there's no secondary market for it.
Yes.
Now, if we tokenize the unit, that would be a security, right? And so it would fall into the security regulations, but also it would be soul bound. It shouldn't be on the secondary market. So in this case, I don't know what the benefit would be to have the unit tokenized. But if you're going to then, is it that it's going to be available on the secondary market? And if so, how do you get it there?
That's precisely the purpose of tokenizing a fund. First of all, is to appeal to the DeFi community who today would like to invest in a secure package as a fund, but also use tokens. Now, a token, as you rightly mentioned, as opposed to a unit is in your name. You buy it, it's registered with the fund administrator, and it's issued in your name. When you want to sell that unit, if the fund is not listed, then you have to sell it back to the fund, and it's called a redemption. If the fund is listed, an exchange-traded fund, for example, then you exchange it on the exchange. A token, however, will take away this complexity because a token then can be exchanged on the traditional exchanges that we have all out there, which exist in ADGM. We have multiple exchanges in ADGM, multi-trading facilities, MTFs, and elsewhere as well. Then this token will have a secondary market, and that's very important, especially when we're talking about private investments. Private investments, to get into them, require a lot of capital. An entry ticket is $5 million. With tokens, we can fractionalize that investment and allow smaller investors to have exposure to private investments.
So I have 2 questions for you here, right? So I understand a token can be listed on an exchange, a centralized exchange or whatever. But not a lot of exchanges will actually allow the listing of a security token because a lot of them don't actually deal in that. So again, is it being listed as a security, or could it be leveraged against another vehicle that actually issues tradable tokens?
So at the moment, as I mentioned, the fund is not yet announced. We're actually working on it.
And I don't feel like we should give that information. That's why people come to us.
Yeah, so we're in discussions with the regulator
out.
on how to do it.
Okay.
But the aim is to have that fund available on exchanges through brokers so that clients can have a secondary market and exchange that token as they do and buy and sell any other virtual assets. The purpose is to democratize and decentralize investments into funds.
Exactly.
It only becomes successful when you marry TradeFi and DeFi. Look at the ETFs on Bitcoin in the US. As soon as they were created, this opened up a lot of investments coming in from traditional investors into Bitcoin. Because these traditional investors, they don't want to go through the hassle of opening a brokerage account with a crypto broker to buy Bitcoin. Having a traditional ETF opened this investment, and this is what we intend to do, to bring closer TradeFi and DeFi.
I'm all for allowing traditional means of investments like real estate, funds, those kinds of things. I'm all for allowing more people in, right? Because even if we're talking about funds, depending on which fund it is, whether it's an exempt fund or a private placement fund or whatever, the buy-in can be anything between $50,000 to, like you were saying, 5 million, right?
Absolutely.
So, but then if we fractionalize a unit like we do with a Bitcoin, would we not somehow be, would it be circumventing the rules and regs that require the minimum buy-in?
No, absolutely not. Because if the fund is open for retail investors, then these minimum investments are not applicable. If the fund is an exempt fund, so the minimum ticket is $50,000, okay? But then this $50,000 minimum investment can invest into a private equity investment that is $5 million. And there, regulations do not apply. So if someone would like to have exposure to a private hotel in Paris, and the entry ticket is $5 million to invest into this private equity deal, then this investor can do it through a $50,000 token. Then we'll have 1%. It's a portion of or fraction of that investment.
Got you. All right. Well, on an ending note, right? Because I know that you had said that you manage, so you can help people set up their fund vehicle, right, and then manage everything for it. And I can honestly tell the audience, dealing with regulated entities, it's an absolute. It's a nightmare, to try and manage as well. Unless you really have experience in the space, you need to get those outsourced positions, right? The MLRO, the compliance officer, the CFO. And so to actually just have someone where you can go, and obviously you can tell how knowledgeable he is from this conversation. It'd be good, we should speak more as well.
Absolutely, thank you very much, thank you.
Thank you so much, it was really nice speaking to you.
You too, thank you, all the best.